I don't know where the time goes. But I do know I say that every year. But thank you so much for joining us today on this 1st of October. We are really happy to be providing this Lunch and Learn donor education session on qualified charitable distributions today, as many individuals are looking towards making a charitable contribution, wanting to make an impact to a cause that they care about. As we look towards the end of the year, using an IRA or other retirement assets as a tool for giving can be quite powerful. And so we're excited to share that content with you. I would like to welcome Ann Barber, who is our Director of Philanthropy here at the Community Foundation, who's going to lead us through some information. So Ann, welcome.
Great, thank you, Shelley. I am going to share my screen so I can share my presentation with you. Are you able to see the screen? Awesome, thank you for letting me know. Okay, well, like Shelley said, my name is Ann Barber. I'm the Director of Philanthropy here at the Community Foundation of Johnson County, and we're just going to talk a little bit about QCDs, Qualified Charitable Distributions, how they work, why they're beneficial, who they are meant for, and how the Community Foundation can help you take advantage of those. Oh, there's my agenda. That's pretty much it. And of course, there'll be time for question and answers at the end, but also feel free to use the chat function, and we can answer questions as we go too. So we'll start with just sort of a basic IRA overview, and I'm sure most people know this already, but what is an RMD? So an RMD is the required minimum distribution from an individual retirement account, an IRA. Fund holders age 73 and older are required to take an RMD annually. If you fail to take your RMD, you can be subject to a 25% excise tax. So obviously, IRA fund holders want to avoid that and take their RMD. RMDs are taxed as income. And a QCD, it similarly is a donation that can be transferred directly from an IRA to a nonprofit. Account holders, so someone who has an IRA who is 70 and a half or older can take a QCD. Now, you'll note that there's an age difference there. The age for the RMD, the required minimum distribution, is 73. The age at which you can start taking a QCD is 70 and a half. So you can actually start taking the QCDs before you're required to take a distribution from your IRA. The QCD can satisfy your RMD. So if you're required to take a minimum distribution of $20,000, let's just say that number, in a year, you could transfer $20,000 to a nonprofit from your IRA as a QCD, and then that would fulfill your RMD requirement. A QCD is not taxed for income tax purposes. So you are not taking that RMD as income. That is going to the charity, and it does not count towards your income. So that's what's really appealing about QCDs for IRA fund holders. QCDs cannot be used for donor advised funds and to go toward private foundations. Other than that, they can go to nonprofit organizations. They can also go to specific funds held at a community foundation, and we'll talk a little bit more about that later. The maximum QCD per year per individual is $105,000. Now, if spouses each have their own IRA, spouses could each make a $105,000 QCD toward a charity or a fund. So why would someone consider a QCD? Well, like we said, it lowers your taxable income. It lowers your adjusted gross income, which is the taxable income that you're subject to. It also lowers your adjusted gross income, which can help avoid higher Medicare Part B and D premiums, which can increase as your income rises. It also as your income rises, you can be phased out of being qualified for certain tax credits and deductions. So it helps keep that AGI, that adjusted gross income, lower so that you can take advantage of all those tax benefits. It also, your IRA is based on your RMD, your required minimum distribution, is based on your age and the funds that are in your IRA. So if you reduce the amount in your IRA, your required minimum distributions, your RMDs annually, are also reduced. So some folks will take a QCD in order to lower that total amount in their IRA so that future year's RMD is also lower. Similarly, if your IRA is in your estate at the time of death, you can be taxed up to 60% on the funds that are in that IRA. So it's also an option to take the QCD in order to lower the total amount in your IRA so that is not taxed at such a high rate. So we'll talk a little bit about an example here of how a QCD would work and why it's beneficial to use a QCD instead of perhaps making a cash gift. So Bob is our example. Bob is 75. He's single. He needs $125,000 in income each year. He is required to withdraw $110,000 annually as his RMD from his IRA. He also gets another $50,000 in taxable income from his pension and Social Security. So that puts his taxable income annually at $160,000. He could take that $160,000 and make a $35,000 donation. Some folks might think that this seems reasonable. It is. He can write off that $35,000 as a charitable deduction. And you can see in scenario 1, that would give him $125,000 of taxable income with the $35,000 itemized deduction. And he ended up paying about $23,000 in taxes on that. Scenario 2, Bob, instead of taking $160,000 in taxable income, he reduces his taxable income by $35,000 by making a QCD of $35,000 to a charity of his choice out of his IRA. That reduces his taxable income to $109,000. And then his taxes due are only $19,000. So he saves about $3,500 in taxes by making the QCD rather than making a gift to a charity in cash. So how can the Community Foundation help with your QCDs? Well, many folks like to give their QCD to more than one organization or more than one fund, and we are happy to help facilitate that process. So you can have your entire QCD sent to us. We're a charity, we're a 501(c)(3) organization, and so we can accept that QCD. And then we will push it out to the organizations of your choice. Some of them may have funds at the Community Foundation, so we will help distribute that QCD. The QCD can be sent to a fund that's held at the Community Foundation. One of our many funds, we'll talk a little bit about those in just a second. You could, it cannot, like we said earlier, it cannot go to a donor advised fund, but it could go to a designated fund, a field of interest fund, an agency fund. If, for example, you wanted to support the North Liberty Community Pantry, well, they have a fund at the Community Foundation. So that would be an existing fund that you could contribute to. You could also start a new fund, a new designated fund or field of interest fund. A designated fund is a fund that supports a specific nonprofit organization. So again, we'll use North Liberty Community Pantry. If you're interested in supporting them, you could set up a designated fund that benefits that single organization. A field of interest fund is a fund that, just like it says, supports a field of interest. So you might say, well, I'm really interested in supporting the arts in Johnson County. You could create a field of interest fund with your QCD that supports a variety of organizations that are working in the arts. Another thing to keep in mind is that a QCD that is directed toward an endowed fund at the community foundation, so a fund that is invested, is eligible for the Endow Iowa tax credit, which is a 25% tax credit. And I'll talk about that in just a second. But the other reason to donate your fund to the community foundation is that we're reinvesting funds. So you see this, this sort of graphic here on the right. We collect a small fee on grants that are made out of funds held at the community foundation, and then we're reinvesting those funds in our community through a variety of community-wide projects and initiatives that we're involved in. So to talk a little bit more about the Endow Iowa tax credit, like I said, gifts to endowed funds held at qualified community foundations in Iowa are eligible for this tax credit. It's a 25% tax credit. So a gift of $10,000 to an endowed fund here at the community foundation would receive a $2,500 tax credit. There is a maximum of $100,000 per donor per year. But I want to show you what that would look like if we go back to Bob in our example from before. You can see in scenario 2, now we've added an Endow Iowa tax credit to Bob's scenario where he uses his QCD. So in addition to taking that qualified charitable deduction, Bob is also now getting a tax credit for $8,750 because he made a $35,000 gift to an endowed fund at a community foundation in Iowa. So now his estimated taxes are down to about $10,000 for the year, as opposed to $23,000 when he was making a $35,000 gift of cash to a charity of his choice. So that brings us to a new initiative that starts today, actually, at the Community Foundation, which is a new fund match. From October 1st until December 31st of this year, we are offering a 10% match on all new funds created at the Community Foundation. The match is up to $2,500. It's one match per family. We have $50,000 in matches to go around. So they could run out by the end of the year, but we're very excited. If you're interested in using your QCD to start a new fund, this is a way to help grow that fund a little more than maybe you would with the QCD, and a way to start growing your fund at the Community Foundation. And I think Ellie was going to put, oh, sorry. Let's see it now. Yes, thanks, Ellie. Ellie put the link to the fund match and a link to the Endow Iowa tax credit information in the chat if you're interested in either of those. And I'll open it up for questions, and we can chat more about how QCDs work. Except I can't get to my next slide. There we go.
So Anne, quick question. What funds are eligible for the match? What
Great
types
question.
of funds?
Yes, any type of fund is eligible for the match. I will point out that, again, if you're using your QCD to start a fund, you can't use a QCD for a donor advised fund. So it would have to be one of the other funds we discussed, like a designated fund or a field of interest fund. But if you're starting your fund with cash or appreciated securities or something like that, you can use, you can create any type of fund and we'll make the match.
That's great. And some of our audience might not know the difference between, so designated, you kind of explained, right?
Yeah.
When the donor creates their fund agreement with us, they specifically state, I want to designate my giving from my fund to this organization every time. Pretty clear. But explain what a field of interest fund might be.
Thanks. Sure. So a field of interest fund is a broader fund. It can support your interests. So maybe your interest is in the environment and you want to help conservation causes. You could set up a field of interest fund for conservation causes. And then those funds would only go to nonprofits kind of working in that space. But not
Great,
a singular organization like the designated fund. It could go to a variety of different organizations.
great. And so thinking about legacy funds,
Yes.
like this is a kind of a great way. Can you explain how if you started a designated, or excuse me, if you started a field of interest fund and you wanted this to be sort of your legacy fund, a fund that would do grant making beyond your living years, what would the process be? Like how would the community foundation make that work?
Absolutely. So we could start a field of interest fund now, again, with your QCD if you wish. You could be involved in your living years. You could be involved in determining sort of where the grants, we call them grants. I think a lot of donors think of them as a donation, but where donations from that fund would go during your living years. And then after the donor's death, that fund continues in perpetuity. And we, as a CFJC and our board of directors, are involved in making sure that those funds continue to go in your name to the causes that you care about. So again, if we're going back to the example of conservation efforts, say, those funds would continue to go to conservation efforts in Johnson County. And I think the beauty of that is that um, the needs of our community change over time. And because these decisions are being made on a yearly basis, the CFJC can make sure that the funds are going to conservation issues that may come up 50 or 70 years from now.
That's great. So, if someone's interested in exploring starting a fund and using their QCD, what should they do?
Well, they should contact me. But it really is, I think sometimes folks think starting a new fund seems overwhelming and like there might be a lot of paperwork, and it's actually a pretty simple process. So we would sit down and chat about what sort of fund you want, what sort of organizations you want to support. And then I would draft up a fund statement for you to review and kind of look over how those funds would be used. You get to name the fund, you get to fund the fund in a way that works for you. We can talk about the way to do that makes most tax sense for you. And then it's pretty simple. Then you can start making grants out of your fund. Yeah.
Great. And, we think about like individuals making these distributions to create funds, but this is really a great way for families to start a giving legacy. So
Absolutely.
perhaps a spouse, wife and husband, or, couple can each do a QCD into a fund and a family fund that they, for a field of interest, not a donor advised, but maybe a field of interest. Maybe the family has a passion for, education, for example, and starts a fund. Or it could be community betterment. That would be a very broad, general type of field of interest fund that could support a lot of causes into the future. But seed that fund with those QCDs, and then the next generation of family can be involved in helping make the decisions of where those grants from the fund go. I It's October 1st, and I'm already thinking about the holiday season. And so knowing that families are getting together in, around Thanksgiving, around the winter holidays, Christmas holidays, it's a great time if families were interested in having like philanthropic conversations about charitable giving, legacy planning, gifting broadly. Um, I would want everyone to kind of know that we and Anne, myself, would be happy to help facilitate any of those conversations, or at least be a part of the planning that you might be having with your families regarding charitable giving.
Absolutely. Thanks, Shelley.
This
Any
is
other
Maggie.
questions?
And I have a question.
Yes.
So if I understand this right, on an annual basis or whenever, if you had one of these funds, you can decide where the money is going to that year. After you're dead, the fund is in the hands of the community foundation. Who in the community foundation decides?
Yes, good question, Maggie. So, well, ultimately, it's up to our board of directors, but we have a grants committee that meets and would review your fund, the parameters of your fund, and then we have a grants process that through which nonprofit organizations can apply, and so we would match up your fund and what it needs to fund with organizations in the community that have needs. If that makes sense. And also the grants committee would kind of do that legwork of that, and then it's approved by our board of directors.
Thanks, that makes sense. And I would say I've been part of that grants committee, and I really think that it's a great process.
Thank you. I appreciate that.
That's great. It's, as our community foundation ages, next year we're going to be celebrating 25 years in existence. We are getting to the point where more of our funds are starting to transition from those annual kind of giving grant funds to the legacy funds. And it's so wonderful to be able to put the donor's name and gift back out into the community, supporting the causes that they care about after they've passed. So it's an important role that we enjoy playing as well. Great.
Any other questions? No? Okay. Sorry, Shelley.
No, I was going to say, Anne, you did a nice job covering qualified charitable distributions. For anyone who's of the special age of 70 and a half or older, we just wanted to make sure that you were aware that you have a special giving opportunity that can help move your personal philanthropy along. So if there's anything that we can do to answer questions or support you, please know. We'd be happy to do so. And there might be individual scenarios regarding your situation that we can help put together a plan for. We also work very closely with professional advisors in the area. So if you have a trusted advisor that you're working with, please feel free to have them reach out to us and explore funds, especially if you're maybe updating a will or estate plan too. We'd be happy to come along to help with language, whatever the situation might be. So happy to help however we can. Great. Well, Anne, great job today. Thank you so much. And if there's any questions or if we can be of assistance, Anne's contact information is on the screen there. You can email or call the office. We'd be happy to assist you. All right.